What if I told you that the difference between someone who struggles with money their entire life and someone who quietly becomes a millionaire might come down to something as small as $5 a day? $5. That's less than the price of a cup of coffee in most cities. It's the kind of money people spend without even noticing. A quick snack on the way home, a random purchase on an online store, drink from a vending machine. Most people don't even remember where their $5 went yesterday. And yet, that tiny amount of money, repeated consistently over time, has the power to completely change someone's financial future. Not through luck, not through complicated investing strategies, and definitely not through risky bets in the stock market. Just through a simple daily habit. But here's the strange part. Almost everyone hears about habits like this and still ignores them. Not because they don't understand the math, but because the habit itself feels too small to matter. And the human brain has a strange weakness. It tends to underestimate small actions that take a long time to produce results, but those small actions, repeated long enough, can create outcomes that look almost unbelievable. So today, we're going to break down the $5 daily habit that quietly creates millionaires. But more importantly, why most people hear about it and still never use it. Asterisk, for many people, money feels like an endless cycle. You wake up, you go to work, you earn money, and by the end of the month, most of it is already gone. Bills, rent, groceries, transportation, subscriptions you forgot to cancel. Unexpected expenses that seem to appear out of nowhere. And even when you try to save a little bit, the progress feels painfully slow. Maybe you manage to put aside $50. Maybe $100. But then something breaks. The car needs repairs, a medical bill appears, or an emergency suddenly demands attention. And, just like that, the savings disappear. After a while, people begin to feel stuck. They start believing that building wealth is something only income individuals can achieve, or that you need to earn six figures before investing even makes sense. But that assumption is one of the biggest financial myths in the modern world, because wealth rarely begins with large amounts of money. In fact, many wealthy investors started with very small amounts. What mattered more than the amount was the habit behind it. Asterisk, when people think about millionaires, they often imagine dramatic success stories. Startup founders, tech entrepreneurs, celebrity investors, people who made massive amounts of money in a short period of time. But those stories are actually the exception. Most millionaires didn't become wealthy overnight. Became wealthy slowly, very slowly, through consistent habits, repeated over many years, saving, investing, avoiding unnecessary debt, allowing their money to grow over time. And one of the most powerful habits behind that growth is surprisingly simple: investing small amounts of money consistently. Even something as small as $5 a day. Asterisk at first. $5 doesn't sound impressive. It feels almost meaningless. But the real power of small investments appears when they are repeated consistently. $5 a day becomes about $150 per month. Over a year, that becomes around $1,800. Still, not life-changing. And that's exactly the moment when many people lose interest. Because human psychology is wired to expect fast results. We want progress to feel exciting. We want results to appear quickly. But wealth rarely grows in exciting ways. It grows quietly, slowly, almost invisibly. Until one day, the numbers begin to accelerate, and that acceleration happens because of one powerful force: compound growth. Asterisk. Compound growth is one of the most powerful forces in finance. Instead of your money simply sitting in a bank account, it begins generating returns, and those returns begin generating returns of their own. This creates a chain reaction. Your money grows, then the growth itself begins to grow. Over time, this process creates a powerful snowball effect. The longer the snowball rolls, the bigger it becomes. This is why time is such an important ingredient in building wealth. Small investments made early in life often outperform larger investments made later, because time allows compounding to work its magic. And that's exactly where the $5 habit becomes so powerful. Asterisk. Imagine two people, person A and person B. Both earn the same income. Both live in the same city. Both face the same financial challenges. But they make one small decision differently. Person A spends $5 a day on small purchases: coffee, snacks, convenience store items. Things that feel harmless in the moment. Person B decides to invest that same $5 instead. Every single day. At first, the difference between their lives is almost invisible. After 1 year, person B has invested around $1,800. That's nice, but it doesn't look life-changing. After 5 years, the account might grow to around $12,000 or $13,000, depending on returns. Still not extraordinary. And this is the moment where most people lose patience, because progress still feels slow. But something important is quietly happening beneath the surface. Compound growth is starting to build momentum. Asterisk. After 10 years of consistent investing, the numbers begin to look different. Those small daily contributions may grow into around $30,000 or more, depending on returns. Now the habit begins to feel meaningful, but the real transformation happens later. After 20 years, those small investments could grow to over $100. At this stage, something interesting happens. The investment account itself begins generating more growth than the investor's contributions. In other words, the money begins working harder than the person who saved it. And when this process continues for 30 or 40 years, the results can become extraordinary. Those small, daily investments could eventually grow into hundreds of thousands of dollars, or even over $1 million, all from a habit that once felt insignificant. Asterisk. At this point, the math seems obvious. So why don't more people follow this strategy? The answer isn't financial, it's psychological. Human beings are wired for instant gratification. Our brains naturally prioritize rewards that happen immediately. Purchase today feels satisfying right away. But investing money delays that reward for years, sometimes decades, and in a world filled with constant advertising, social media pressure, and consumer culture, delaying gratification has become harder than ever. Everywhere you look, the message is the same: buy now, upgrade now, enjoy now. Very few messages encourage patience. Very few encourage long-term thinking. And that's why the $5 habit remains so powerful. Because the people who actually follow it are doing something most people never manage to do. They're thinking about their future selves. Imagine meeting the version of yourself 20 or 30 years from now. What would that person say? Would they thank you for the financial habits you started today? Or would they wish you had started earlier? Every small financial decision you make today affects that future version of yourself. The money you invest now may become the freedom that future you depends on. Freedom from financial stress. Freedom from worrying about bills. Freedom to make life choices based on passion rather than necessity. And that freedom often begins with something very small. A habit worth just $5 a day. Asterisk. If there's one factor that quietly separates wealthy investors from everyone else, it's time. Not intelligence. Not luck. And not even necessarily income time. Because time allows compound growth to do something extraordinary. At first, the progress looks slow, almost boring. Your investment account grows a little each month, maybe a few dollars, maybe a few hundred. But the longer the process continues, the more powerful it becomes. And eventually, something surprising happens. Your money starts growing faster than the amount you're adding to it. At that moment, the entire system begins working for you. Instead of trading time for money, your money begins generating money on its own. And that's when the snowball truly begins to roll. Asterisk. Let's imagine two people again. Alex and Jordan. Alex starts investing $5 a day at age 5. Jordan waits until age 35 to start. Both invest the exact same amount. $5 every day. Both earn the same average investment return. But here's where things become interesting. Even though Jordan eventually invests the same amount of money each day, Alex still ends up with dramatically more wealth. Why? Because Alex gave compound growth. 10 extra years to work, 10 extra years of compounding can create a massive difference. This is one of the most important lessons in personal finance. Starting early often matters more than investing large amounts later, and that's why small habits like the $5 investment can be so powerful. They allow you to start immediately, without waiting for the perfect moment. Many people tell themselves they'll start investing later, when they earn more money, when their financial situation improves, when life becomes less busy. But the problem is, later rarely arrives. Life always finds new ways to demand your attention. New expenses appear. New responsibilities emerge. And suddenly, 10 years have passed. This is why many people reach their 40s or 50s and wish they had started investing much earlier. Because they realize something important. The biggest advantage in investing isn't having more money, it's having more time. There's a powerful idea in psychology called the compound effect. It suggests that small decisions, repeated over long periods of time, create massive differences in outcomes. Eating slightly healthier every day eventually improves your health. Reading a few pages every day eventually expands your knowledge, and saving or investing small amounts regularly eventually builds wealth. But the opposite is also true. Small, negative habits repeated over time can slowly damage your financial future. Spending $5 every day might not seem dangerous, but over decades, those small purchases can quietly cost thousands of dollars. Money that could have been growing. Money that could have been working for you. Money that could have created freedom later in life. Asterisk. People who build wealth tend to think differently about time. They don't just focus on the present moment, they constantly consider the future. Before making a financial decision, they often ask themselves a simple question. What will this choice look like 10 years from now? Everything. Because when you stretch your perspective into the future, many small spending decisions start to look very different. A purchase that once felt harmless may suddenly look expensive. When you consider its long-term cost, and investing small amounts begins to feel much more meaningful, because you realize that every dollar invested today is like planting a seed for the future. Asterisk. Think of investing like planting trees. When you plant a tree, nothing dramatic happens right away. The ground looks almost the same. Weeks pass, sometimes months. The progress feels invisible. But beneath the surface, something important is happening. Roots are growing, the foundation is strengthening, and eventually, the tree begins to rise. Years later, that small seed becomes something much larger, something strong, something that provides shade, fruit, and stability. Investing works the same way. Your early contributions are like seeds. They may look small at first, but over time they grow into something much more powerful. One of the biggest challenges in building wealth is discipline. Not complicated strategies, not advanced financial knowledge, just discipline. Because discipline allows you to keep investing even when progress feels slow. It allows you to stay consistent during market ups and downs. And most importantly, it allows you to continue your habits long enough for compounding to work. Many successful investors follow a very simple strategy. They invest regularly, they ignore short-term noise, and they give their investments time to grow. That's it. No complicated tricks, no constant trading, just patience and consistency. One of the biggest threats to long-term investing is emotion. When markets rise quickly, many people feel excited and invest too aggressively. When markets fall, fear appears, and many investors panic. They sell their investments, they abandon their strategy, and they interrupt the compounding process that was working for them. Successful investors understand something important. Short-term market movements are normal. Markets rise, markets fall. But over long periods of time, they tend to grow. This is why patience becomes such a powerful advantage. One of the easiest ways to remove emotional decisions from investing is automation. Instead of deciding whether to invest every month, you simply set up automatic contributions, $5 a day, or roughly $150 per month. The money moves automatically into your investments. No decisions, no hesitation, no temptation to spend it elsewhere. This simple system ensures that your wealth-building habit continues quietly in the background, while you focus on living your life. For many people, there's a moment when investing suddenly feels real. It might happen after several years of consistent contributions. You open your account one day and notice something surprising. The growth in your account during that year is larger than the amount you contributed. That's when the realization hits. Your money is now working for you. The system you started years ago has begun generating its own momentum. And that moment often becomes incredibly motivating because you finally see the results of your patience. Momentum is powerful. Once your investment habit becomes part of your routine, it feels natural. Saving and investing no longer feel like sacrifices. They simply become part of your lifestyle, and over time, many people increase their contributions. Maybe $5 becomes 10, maybe 10 becomes 20. The habit grows stronger, and the snowball continues to grow. Many people imagine millionaires making huge financial moves, large investments, complex strategies, risky opportunities. But surprisingly, many millionaires began with very ordinary habits: saving small amounts, investing consistently, avoiding unnecessary debt, living slightly below their means. These habits may not look exciting on the surface, but over time, they create extraordinary results. The $5 habit isn't really about $5. It's about building a system that works for you. A system that turns small actions into large outcomes. A system that slowly transforms discipline into freedom. Because financial freedom rarely appears overnight. It grows quietly in the background of everyday life. Through habits, through patience, through time. Imagine yourself 20 or 30 years from now, a future where financial stress is smaller, where opportunities feel wider, where money no longer controls your decisions. That future version of you is shaped by the habits you start today. And sometimes, those habits begin with something incredibly simple. $5 a day. A decision so small it almost feels insignificant, yet powerful enough to quietly create millionaires. The best time to start was years ago. The second best time is today. And that simple $5 habit might just become the foundation of a very different future.